When we talk about valuation also, how do you actually value a company? Like when we look at some companies, you talk about huge amounts of valuation. How do you arrive at the number? Even though sometimes when we look at the balance sheets, the company is actually not making any money or not making profits, but the valuation is actually very high. How is that number
Right.
determined?
Look, I think there are two main classes. The first, which is the earlier stages, whereby they could be generating minimum revenues or even no revenue,
Yep.
not to mention profit. If there's no revenue, there's no profit. That's one bucket. The other bucket, they got the revenue engine running and generating revenues. Now, there will be a bit more science in the second bucket, right? And we do what we call a market comps,
Yes.
right? Market comparisons.
Yep.
So we take similar companies and see what does the market prescribe them in terms of valuation, right? It's a
Yes.
equilibrium thing, demand and supply equilibrium, right? So if we say that, okay, look, for a company in this industry with this sort of growth trajectory, at this sort of size, in this sort of geography, market is willing to prescribe, say, 5x price revenue ratio, right? Price sales ratio.
Right.
If they're profitable, I don't know, maybe 10x PE ratio. Now these are very, very
Estimates.
public,
Yep.
numbers. You could, for a late stage company, it's totally fair to benchmark them against public listed companies. If not, you have private companies through, regulatory filings. If you know certain M&A transactions, we take reference from those. Now, so that is straightforward,
Yes.
right? Now let's go to the first bucket.
Yeah. You have nothing.
A bit more mysterious,
Yes.
right? To sum it up,
Yep.
I mean, different investors will tell you different things.
Yeah.
Some will tell you there's some science to it.